afternoon, Dr. Seetharaman.
Good afternoon.
Today on the Knowledge Management Forum, we would like to hear from you on the Indian economy and bilateral relations later. What is your outlook on the Indian economy?
Indian economy is in a defining moment. The growth, the last quarter is 4.8, and fiscal year, if you look at it, they should be coasting average between 4.8 to 5%. But 2014, they should be doing more than 5%. That's the indication we have. Good alignment of monetary policy and fiscal policy should drive more than 5%. The consumer price inflation is 8.1%, which has come down in this quarter compared to the previous quarter, that is 8.7%. The interest rate hike by the RBI governor has helped to contain inflation. At the same time, we have to look at the current account deficit as well as fiscal deficit. As far as current account deficit, they should be closing with the fiscal closure year 42 billion. 4.8% is the maximum, that is the target, and essentially they should be ending up. When it comes to fiscal, again, they should be reporting not less than 4.8 to 5% as a fiscal deficit. That's in the higher side. Conceptually, they're in the higher side, but they have to contain the current account deficit, and to a large extent RBI monetary tools and also non-resident leverage schemes, deposits have flown in, and that has helped to consolidate the position in terms of current account.
Could you tell us what are the current trends in the Indian financial markets?
Financial market, the stock market has done reasonably well, while the rest of the world is reeling under pressure. 8% year to date up. Rupee is becoming strong. Now $1 is equal to 60 rupee. That's a good sign of containment, and at the same time real appreciation in terms of overall economic balance. When it comes to free market dynamics, rupee is still not administered. When it comes to changing dynamics of the world, rupee has strengthened. That's a good sign because of the prudent RBI measures. When it comes to the stock market, currency market, commodity market, if you look at it, Indian inflation is mainly contributory through the oil and gas. That's an issue which we need to look at it. When it comes to bond market, they have not done well. It is just 8.5 billion for the first 3 months. Last year by this time it was 14 billion. The whole year last year was 42 billion. So they need to issue more debt papers. Indian corporates, Indian sovereigns need to issue more and more, mobilize more foreign direct investment through debt papers.
Dr. Seetharaman, what is your outlook on the Indian banking sector?
The banking sector has done reasonably well. If you look at the bigger picture, 14.5% is the credit expansion, nearly 16%, 15.9% is the deposit expansion, and that's a good sign. Whereas in 2012, if you look at it, it's over 16.5% is the credit growth. That didn't happen. Now, the deposits are mobilized through, as I said earlier, through the RBI promoting non-resident investments through FCNR deposits. That helped more deposit inflow. That's a good sign. And when it comes to 2014, we have bigger challenge of lending and inflation. So when it comes to infrastructure or corporate or commercial lending, we need more and more credit creations. That will happen only if the economy is going well. When it comes to NPL, it's not a great story. 5% is a bad books, and restructured debts is again 5%. When it comes to non-performing assets, 5% is really on the higher side.
Could we have your insights on the monetary policy of the Reserve Bank of India?
Reserve Bank has done well. If you look at since September, the concept is clear that inflation needs to be contained, current account deficit needs to be reduced, fiscal consolidation has to take place. Now, this is an alignment between fiscal policy and monetary policy. The RBI governor, what he has done is, in January, he has increased the rate by 0.25% to contain the inflation again. That has paid real results. From 8.7% to 8.1% is the consumer price inflation. That's a good sign. But overall, if you look at it, they want to bring it down. In global terms, 2%. America is aiming at inflation. Japan is aiming at 2% inflation. So India has to gradually bring it down. 8% by by this fiscal year end, and 6% by 2016, and again 4% in 2018. That's the trend we have to. It means we need to look at the fixing up, mapping those issues which are confined to inflation, and also ensuring fiscal consolidation comes in.
Could you tell us about the GCC banks which are active in the Indian banking sector?
Many. To start with, we should talk about the BBK, which is operating in two cities, Bombay and Bangalore, Hyderabad, and good flow of relationship between Bahrain and India. It has been established since 1980. A good performing bank. They have an asset of nearly half a billion, $550 million worth of assets they have given in the market. That's the total exposure, and they are investing still. They are expanding in terms of overall credit base. They are also expanding in terms of clients south and in the Hyderabad, as well as in west in Bombay, and it's a good performing bank. The second bank I can think of is again Abu Dhabi Commercial Bank. That's been operating for years, and it's in Bangalore as well as Bombay. Bombay is the first destination for mostly as a commercial capital for India, and they have a bilateral relationship between Abu Dhabi, UAE in particular, and India. They are good at trade. They are also having sizable expansion plans in the years to come. First Gulf Bank is aiming at India. Now new license has been given to Abu Dhabi Commercial, National Bank of Abu Dhabi now, and they are also going to set up their infrastructure in the coming months. So now Doha Bank is the next bank which will be supporting the bilateral trade, investment banking and finance from Qatar and the Gulf states to India. We are in the making of setting up a branch. Integrating people, process and technology will be the drive.
Could you tell us about Basel III implementation in India?
Basel III is coming up. They extended the timelines to 2018. The global benchmark is 1st January 2019. India has set in March 2018 as a deadline. Conservative buffer will be 2015 to 16, while the overall compliance will stand at 2018. It was originally 2017. The idea is to make sure all the banks within India, nationalized, private, all banks put together, coming to terms with the international benchmarks. It is a cautious, at the same time meaningful approach to gradually build the capital. India is grossly underbanked, undercapitalized. They need to procure the capital because the growth momentum is there. At the same time, capital expansion is important. And that is precisely the reason they are given sufficient time to respond to the global benchmarks.
Thank you, Dr. Seetharaman.
My pleasure.